Good morning, everyone. Happy Friday. Boy, oh boy. Ian, what's going on, brother? Donnie, Badir, Nate, how's everyone doing? Hey, Phil. What's up, Flex? Welcome to the folks on YouTube who are joining us. Dano, what's up, brother? How's life in paradise? What's up, Illiquid? Hey, JB. What are you doing awake? Working the night shift? Marcus, how are you? Where's Cisco? Did you take the weekend off? Mm. Oh, you guys having storms? It was windy here in Liverpool last night. It was crazy. But Liverpool's always it's got this crazy wind. It's good. It blows away all the ghosts. How's everyone doing this morning? Happy Friday, everyone. Welcome, welcome. I'm JJ. This is the Trading Syndicate, and this is where we teach real people how to make real money. Alexander, what's going on? How are you doing, brother? Okay, what are we going to do today? Well, we're kind of looking for the bid, aren't we? We are kind of looking for the bid. And that low here, where is that low? 66.41. We're looking for it, Phil. It's kind of like when you lose your keys, right? we're, we're looking for it's like you're looking for your car keys and you can't find them anywhere. So you're tearing apart the couch cushions. We found a little bit of a bid here at 50. Okay? So overnight inventory, friends, is let's see. Overnight inventory is it's long, right? Overnight inventory is long, and we are correcting it. So yesterday, of course, the market sold off. Okay. So this is what I was telling people. Everybody yesterday was saying, it's going to be we're going to buy all this paper and then run it up at night. Well, we did a little bit. We did a little bit. There's that liquidating inventory. They took it and sold it for a few hours, quite a decent distribution, and then back down. Now we're under yesterday's low. So if we were to open here, we'd open on a gap. So as soon as we took out yesterday's low, anyone who was long and was using yesterday's low as as a stop, they're getting stopped out now. They're getting auto liquidated. Um, if you'll see, yesterday we had a gap, right? So this is the first time we've had a gap down that hasn't filled that day. Ah. Now, you guys need to know when there's change. Usually what happens when we have a gap down, we go and fill it that RTH, right? It gaps down at night, and then the next morning we fill the gap. Like we go up and fill the gap. You notice that's happened a lot. This is the first time it hasn't happened. Now there is, right? Those are things that you need to watch out for when you're a trader because those kinds of situations, you really want to keep. Well, you want to be aware of these things because when change happens in markets, folks, you want to be able to understand why that change is happening so you can trade in the right direction, you can manage your risk, all that good stuff. We want you to be able to manage your risk. We want you to be able to, not lose money just unnecessarily, right? So let's go take a look and see what we can do here. So if we take out that low at 41, that'll be a big swing low for us, right? Yes, contract rollover affects this behavior, Ian. Sorry, my brain is just waking up here, so you'll have to forgive me. Um, Kind of a lot to talk about today, so I hope you guys don't mind. Uh, this contract rollover, this is one of the first times, Ian, where the market is going lower before contract rollover. Where's Raj? He's usually like most of you folks who keep, who keep track of this stuff. Usually contract rollover is a short squeeze. This is one of the first times in a while that that is not happening. Remember, Raj, yesterday you said catcher's mitt? And I said, not just yet. Now, the old contract and the new contract, I'm just going to show you. So the old contract, we've traded 111,000 contracts. The new one's only traded 19,000. I'm sure that'll catch up by Monday, so I'm going to perform the rollover on Sunday or on the weekend. And I'll have the levels out for you in the weekend update, okay? So volume still hasn't caught up. This is one of the first times that we're going to be rolling over and rolling where the shorts get to cover. Now, I want you to bring your attention to, let me just get rid of all this stuff here, okay? I want you to take a look at this. And do you see anything similar? Do you see anything similar between this and this? March, April, things get a little wonky in markets because they have to reset the cost basis, right? In order for the market to reset a cost basis, and what do you mean by resetting a cost basis? Well, if we're going to take the market up in December, how are we going to get cheap product? So if we were sitting here between 6,800 and 7,000, if we wanted to take the market up, we'd have to take it to bloody 8,000, right? And that's a lot harder to do why don't we flush all of these people out, right? Hammer it down here to this level here, this 6,200 level, 6,000 to 6,200. Buy it all back and then do this. That would kind of work, wouldn't it? Because otherwise you're going to have to chew through all these people to take it up to 8,000. And, you know, uh, how do I say this politely? There's a war going on. So we have a war going on, and people are nervous. The people who own massive positions in companies, the big investors, they own those positions at really cheap prices, right? They own, they own this stuff really cheap. They own Microsoft at $40 a share, right? So that's what you gotta wonder about that and think about that. How is everybody gonna get their 2027 bonus if we don't take the market down? So I just want you to realize that, because a lot of us are traders who buy the dip. We're look below and fail traders. But you got to understand that, do you see there was a distribution balance. This is a distribution balance, right? So this balance and this one was just longer. So we're going to be looking at, you see where we are? That's 65.85 area. Do you see this low here? And that low here, and that low here? Those are sort of the gatekeepers to lower price. So let's see what happens. It could be long and drawn out, right? And remember, when you roll this contract, the new contract is trading 67.09. We are trading 66.60. Okay? So the new contract is always 30, 40, 50 points higher. So just remember that. Well, this time it kind of looks like the same thing, Jiraj, right? Last time, remember what happened? Remember we talked about situational awareness, right? So you don't have to really understand everything in the news cycle, but remember when President Trump had his Terminator 2 Judgment Day thing, and he crashed the markets all the way down to 5,000, right? Yeah, so if we stay under that 200, that is going to cause people to start selling, right? The old guys would say it's going to spark off sell programs, right? We had DeepSeek and the tariffs. This year we have AI, we have a war, right? I talked to one of my, I live in this building, and there's a bunch of young kids from the Middle East, and one of our young guys, you know, he went to Qatar to visit his family, and the war broke out, and it took him like a week to get back home because he had to fly from here to there, take, you know, drive from here to there, and then take a plane, and then take a bus. It took him a while. So things are a little different, right? So let's be aware of that. Now, what does that mean for us as traders? Well, what that means for us, my friends, is when you are trading and you're looking for the look below and fail, if all the inventory is above us, then you've got to be a little quick. You can't really go for, if we're robbing a bank, you don't want to go for the vault. You want to just go for the cash drawers, okay? Go for the cash drawer. Don't go for the vault. Because if we go for the vault, they're going to get us. They're going to get you. So just go for the cash drawers. Don't go for the vault. Get in and out. Be quick, right? Like a thief in the night. All right. So let's see. Let's see. Just I want you to be aware of what's really going on out there. Last time we did a look below and fail of 66.21. Don't know if we'll get there. You speak like someone who's robbed a bank before? Hey, Corey, what's up, man? I've robbed a lot of banks. Well, actually, my clients have, and I've been I was just the hired geek, right? I drove the getaway car. Yes, but I actually have clients who have robbed banks and brokerage firms. They don't do it with guns; they do it with financial transactions. But yeah, I have clients. I've had clients in the past who, for fun, will bankrupt a brokerage firm. Um, they're nuts, right? They're very they're high functioning sociopaths, right? They're really, really smart and really scary, and they don't have any, um, not morals, but they don't have that switch. So I've learned this business the hard way. Okay. Let's look at 66.21 for a downside target. Last time, you guys notice every time we dip under 66.21, we come back. This time, if we tag 66.21 and we don't get back above it, right? If we take out that low, I think that was Monday's low, right? Then look for downside continuation and your target will be 64.85. Now these numbers are going to change when I roll the contract over and I'll post that. But for those of you trading this contract, just be careful about that. Contract rollover, end of the quarter, is always a pain in the butt. So if you guys want to understand how we roll over the contract, right? Hey Dave, how you doing? Um, I've got a video, and I posted it yesterday in our room, and I might do a contract rollover session. So we'll see. Well, if people are interested in it, I'll do it. Um, yeah. So what are we doing? What are we doing? What are we doing here? Let's see. Let's see. So there we are. Here's there's our overnight low. You could see, why don't I have, oh yeah, my thing, hang on, I was doing it in another chart book. So there's the close of yesterday. Sorry, folks. Here's yesterday's low. So we're getting liquidation now, right? We're getting that liquidation. We've got single prints, in the profile. We've got a little set of single prints here, right? That's supply. And then we've got another set of single prints here. That's supply. So generally, now what usually happens when we take a previous day low? The short sellers come in and they cover here, and then we get that move, right? What we want to do is the overnight point of control is all the way up here. See? It's at 66.92. So what we need to do, and then yesterday's point of control is here. Now, point of control is a fancy way of saying this is what we paid for the stuff. We need that to drop down so there can be accumulation here before we do this. Now, sometimes we will do this before the point of control drops down, right? That inventory gets leaked out because sometimes we'll have a lot of short covering. Tonight doesn't really seem to be the same thing. You guys notice that things are a little different tonight, right? There's liquidation. There's sellers, right? There are sellers tonight. And that's a good thing for the market. I know it's not a good thing if you're long at 6,800 or 6,900, but it's a good thing for the market because this market needs to be two-sided, and we need to reset that cost basis. And I've been saying since January that this market is going to go down probably in a month or two so people can reset the cost basis and we can shake out. You guys have to understand how these markets work is you get people long and then you shake them out. People who buy money on credit, buy stock on credit, right? You shake those people out. It's like you sell somebody a car and they're on finance. They're financing a car, right? Like in the 80s, all my buddies, they would go and buy a brand new Camaro and put it on payments. After about 6 months of driving the car, they lose their job or something. They can't afford the payments and the car gets repoed, right? And then the dealership takes it back and then resells it. Okay? And this happens over and over and over again. So what we have here in this market is it's like the world's largest used car dealership. Okay? And that's what we're doing right now. We are repossessing contracts. So how do we trade this, right? You're like, okay, JJ, that's great. That's really wonderful. How the hell do we trade this now? Well, carefully. Carefully. Let's go see what we're looking at tonight. Now, I've been waiting to do a balance zone. Okay? So, I've got my VWAP set at the open. I thought this would be a balance, but nah. Let's see if this is our balance zone. Let's see if it holds this area here. Sometimes you can't find a balance zone because the market is in trend down or trend up. So you just chill out. Let's see if we get a look below and fail of 51.5. Then we can maybe use this as our balance. Let's see. Give it some time. Right? There's obviously still liquidation. I'm going to wait for the next candle. And what I'm doing is I'm looking for a high and a low. Where did I get the low right? Was it there? Right. I'm looking for a high and a low. And when we look above that high, we come right back to that low. Hey, we got a balance. It's a little big. It's 11 points, but look at that. Bada bing, bada boom. There you go, Dave. There you go, right? So now we've got our balance. Right? What balance is building a cost basis after a liquidation or building a cost basis into distribution. And that's that two-sided trade where the size traders are just waiting because they know that there's all this liquidation happening. So we'll just watch this now. We've got our balance. Let me see. I'll go and open up my trading software. Let's see what happens when London opens. That's not a poor low, but it might as well be one. Yeah, nice, nice, nice. And we know there are going to be sellers here. VWAP's all the way up here. So we got some cleaning to do, right? We got some cleaning to do. We had like a 6 month party. New highs every day, every other day. Now we got to go do it again, right? Go clean it up and do it again. Right? It's the same thing. This business, ladies and gentlemen, is the same thing over and over and again. So we've got 1,415 contracts. We'd like to move that lower, right? We've got supply up here for sure. 66, 64, 3/4 to 67 quarter. So let's see, right? Now, once you've got that balance zone drawn, we can just trade that back and forth, right? If it stays here for an hour or two, that would be cool, because then all we have to do is just do the look below and fail, right? Buy 52, put your stop at 51, sell 56. That's not a bad deal, right? When it looks above and fails 60, we short 60, 59, put our stop here at 61, cover some at 56, cover some at 52, right? Because it's going to be rotational, right? Boom, 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 boom. So we trade from the outside in, outside in. Nice and simple. Nice and simple. Not complicated, right? Just simple is good, friends. Simple is really, really good. There's London. Let's see. Yeah, so now you've got your balance zone. You want to wait. So if you're looking for a big long, right, and you want to build a position, I would build a position underneath 56, sell some of it between 56 and 60, and then sell the rest up here, right? You want to wait for overnight inventory to get short. That would be perfect, right? Let's see how much short covering we get now, right? Because London opened here, it went down, couldn't get under 53. Important, right? Couldn't get under 53. There's sellers here, right? Just where we thought they would be. See how it came up above 58 and back down? Now let's see, can it hold the 58s? So right now what we're doing is we're doing what we call reconnaissance. We're doing market intelligence, right? All right, there's the seller. Now let's see if 51 holds. This is how I'm thinking right now, right? I'm thinking Does 51 hold? And if you want to trade this, look at that. Look at that. There's the look below. Remember, we're trying to find the bid, right? There's the look below. Let's see if we fail. So long 52, put a sell order at 54. See if I can get one out at 54 and one at 53 and 3/4, and I can't. Not just yet. So I'm watching that offer, right? And if it takes out 51, I'm gone, right? So that didn't work, right? I was too early, right? Too early. I should wait. Now, I'm going to wait for the next candle because I can see bid, bid, bid. So I don't mind taking that again if the next candle stays above 51. If it doesn't, there's no reason for me to be in the trade. You understand what I'm saying? I don't mind scratching a trade. I don't mind being wrong. I'm used to being wrong. I was married for 17 years, and I got told I was wrong a lot. So there's the bid again. Do I trust that? Nah. See, that's why I scratched, right? Sure thing, Howard. I'm sorry. There you go. Right? I don't mind being wrong, right? The quicker you admit that you're wrong, the less money you lose. The quicker you admit you're wrong, the less money you lose. It's it's just so simple. You know, it's just so simple. Right? I'll just wait now. I'll just wait. If it doesn't take back 52, no reason for me to look for a long. Now, I don't like shorting right at the bottom of a range because I don't know what kind of buying is going to come in here. So I'll just sit and watch this for a bit. You know, I'll just sit and watch. Does everybody understand my logic during this process? So I took the long. I was long 52.25 or something on 2 contracts, and I blew out of them just under 51. Right? You know, there's no reason for me to still be stuck in that trade and just eating, you know, as my brothers in California say, eating foam in a massive wipeout, right? What's the point? Right? Look at that. I'm waiting for the large traders to come in and tell me, JJ, there's bids. Let's see. Right? That's a short covering candle, right? Just let them figure out where the low is. You don't need to open your wallet when you're surrounded by billionaires, right? Oh, look at that. We know we got a seller at 51. Beautiful, right? Am I upset that I lost a couple of points? No. I was paying for information, right? And that information kept me from losing a lot of money because if I was long 52 and added at 50 and added at 48, I'd kind of be sucking wind right now, right? And then your emotions are all screwed up, right? Let the large traders work this out. You just sit back, right? If it's nighttime, have some popcorn. If it's morning, have a coffee. Just chill. Just chill, right? And if you're relaxed, when the actual trade does come, I promise you, you'll be in a better mindset to take it, and you'll trade way better if you're relaxed. But if you've been stopped out 5 times and you've lost a significant amount of your trading capital, then it's going to be really, really difficult. It's, you know, it'll be quite punishing. Don't do that to yourself, right? Trading psychology is best used before you lose all your money. Know what I mean? right? You don't want to go to a trading psychologist after you've blown up your account. Then psychology is useless, right? Psychology is useful before you lose your money. Now, what does that mean? It means that you should be using trading psychology to keep yourself mentally sharp and not do business at the wrong time. Instead of blowing up your account, getting into that habit of blowing accounts, losing money, and then seeking psychology. Because that's not going to help you. You just don't know what you're doing. You don't need a psychologist, right? So now once we take that old overnight low, I left it there just to show you that there's probably going to be sellers there. See? There. See? Look. Did you see that? Just as I said there's probably going to be sellers at that old overnight low, boom, they came in. See? How predictable is that? That's a beautiful thing because if you were going, like say you jumped the gun and went long at 47 and you know there's a seller at 51, wouldn't you sell at 50? You guys understand my logic behind this, right? This is why in our room, and we got a 3-day trial, I'm telling you folks, take advantage of that 3-day trial. I'm not going anywhere. I'll be around. Come in for 3 days, try it out, and we only charge $19 a month anyway. And I promise you, you'll learn more with me in a month than you will 10 years anywhere else. Guaranteed. I can guarantee that. All you got to do is pay attention. Right? Let the market find the bottom. Let the large traders work that out, right? It's a negotiation. It is a pure negotiation. Finding the low is a negotiation, right? That's like when my dad used to go buy a car. He'd walk into the dealership. How much is the car? The car is 20 grand. My dad goes, I'll give you 5 grand. I'm like, I'm going to get a chair because we're going to be here for hours, right? Just let them find that low, right? Let's see. Now, on our 4-hour candle wax chart, let me just bring that over. Sorry. Right? See how it's just, there's a little bit of short covering, the shorts cover, then they see more sellers, the bid drops, the bid drops, the bid drops. Just let it drop. Don't worry about it. Don't try and catch it. Just relax. Let's go to our 4-hour chart. Right? It's Friday. You don't want to work too hard on a Friday, right? 66.29 is going to be the next level down. And let's see if it holds that. And then 6,600. Then what do we got under that, right? We got 65.71. What I hate about contract rollover is just as soon as you get all these beautiful charts and they're working, you got to go and change them. Nice work, Dano. Nice work. Well done, brother. Well done. Nice. Saw that seller and you sold right alongside. Beautiful. Right? That is that is shorting against 51. No sticky buying, right, Raj? So remember you keep thinking that there's going to be a short squeeze and 99% of the time you're right. But now you have to kind of change the way you're looking at things, right? You want to change that and be a little greedy and see where they find the bid. That's really the key to this now, right? You really want to let them find the bid. There you go, Dano. Beautiful. Beautiful, brother. Yeah, the market needs to reset its cost basis. That's going to fart around here for a while, right? That was a great short off of the 51s, right? You saw seller, 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 boom. Good reflexes, right? I'm just going to keep drawing these overnight lows where they kind of hold for a little bit because on the way back up, if you're a TPO person, you can see, oh, there's going to be a little resistance here at 45.5 and here, right? Just let them sell it off, right? Let them sell it off. Beautiful. That's perfect. Does everybody understand what we're talking about here? So if I'm going to take a long, right? Because I know we lost the bid here. This is the trade I'd look for. I'd go long 32 up to maybe 36, make a couple of points. If that doesn't happen, I'm perfectly happy to wait. Had a great week for my clients that I traded for. And so today, the object today is not to give back any money that we made this week. Right? Not giving back a dime, right? Right. And you'll see if we go, let's go look at other assets, right? You'll see that Bitcoin's kind of getting some selling now. Ethereum's got a little bit of selling on the 30-minute candles, right? You can see that, right? They're going to liquidate, they're liquidating inventory here. Risk assets are getting hit, right? Maybe there's some bad news. Just let the market do its thing, right? I'll be a look below and fail buyer at 31. In the middle of the range, you're not getting my money, right? You are not getting my money, right? I'm going to just chill out and wait, right? And that way you just totally. Yeah, that's great. Windmill Willie. I always think of Boxcar Willie when I see that name, right? So, yeah, like if we can't get down to 36 and you're short, maybe pay yourself a little bit. The thing is, what time is it now? It's 4:15 in the morning in New York. So there's not a lot of buyers around, right? I still remember those Boxcar Willie commercials when I was a kid. Boxcar Willie was a guy who used to ride the rails who was actually a hobo. And then he became a singer and he became wildly successful. But they called him Boxcar Willie. So we got a little bit of short covering coming in here in the 43s. I don't know if we can say hobo anymore. There should be there are all these words that are banned. He was kind of like the British have. What do they have? Seasick Steve. It's kind of the same thing as Boxcar Willie. So as we get up here, right? If you are long, my friends, if you had a gun to your head and you did take a trade and you're long 42, there's going to be some selling somewhere between 46 and 48. So just be aware of that. Okay? I will wait until the market reclaims 51 because it's Friday and I don't want to take trades that aren't really A plus. So I'm going to be a bit of a Finsky, and I'm only going to trade the A plus setup today because I just really don't want to give back any money. I told you to change it, Howard. See, and your trading's gotten better since you got rid of the hobo, didn't you? See? The red block, which is 20, does it match the range of the blue? It's just double the blue area. Willie, it's the blue area is a cost basis. This is the 2 times discount zone. So this is the cost basis. This is how much we paid for our stuff. This is where we put it on sale. So when I buy it, I want to buy it down here, right? I want to get the best deal. Like I'm the guy. I used to when I was a trader, they had these shoes. What were they called? Allen Edmonds. They had these dress shoes called Allen Edmonds, and in Canada they were $600 a pair. But if you went down to Seattle, if you went like in Vancouver, they were 600, 500, $600 a pair. But if you went to Seattle, there was a place called Nordstrom Rack where they'd have these shoes on sale, and you get them for $99 US. So that's what I used to do. You'd hit the rack store, and you try and get the product as cheap as humanly possible, right? It was the best. God, I haven't worn a pair of dress shoes in 25 years. That's how bad it is. You know? Remember Liberty House, Dano? They used to have. I still remember in the 80s. This is the first time I ever saw a pair of shoes that were $1,000 for a pair of shoes. Look, see how there's sellers at 66.47 and 3/4? See? We knew there's going to be sellers there. Yeah, my favorite place, Dano, is Island Slipper House, Ala Moana Mall. I'm very happy to be there. Oh yeah, I like getting a deal, man. I hate paying retail. I'll tell you something. When I was a bouncer, right, I didn't pay for anything. I got into movies for free, restaurants for free because I'd let people pass the lineup. So I'd made, like anytime, and then if somebody wanted to buy a watch, if somebody wanted to buy a car, I'd be like, hang on, I got a guy. He'll get you a deal, right? I always had a guy who could get you a deal, right? That was, and that's what I did. That's how I got my job at brokerage firms. People like I knew traders and stuff like that, and they wanted to buy a watch, and I'm like, wait, don't pay retail. I got a watch guy, right? Go to him, and he'll get you a deal, right? Always getting a deal. I never paid for movies. I never waited. Like I'd go to like almost Michelin star restaurants because I'd let the chefs in through the line, and they would always let me in. It was great. You didn't have to pay for these meals. It was wonderful. I'm always working an angle, right? That's the way I've grown up, right? Because I didn't grow up with a ton of money, so and when you live in a place like Vancouver in the 90s, man, everything it cost $20 to take a breath. So you had to hustle, right? You had to hustle, right? Got a guy. You need something? I got a guy. And that's what I bring that to trading, right? You want to buy ES? Wait, I got a guy. We'll get it at 32. Don't pay 46 for it. Let's see if we can get your product at 32. Because the ride from 32 to 36 is a lot easier than the ride from 46 to 50. Right? Uh, yeah, I know. I've got one pair of dress shoes here, and I think I've worn them once. All right. We're trying to creep here. We're trying to creep. We're trying to creep higher. Here we go. Here we go. There's going to be sellers at 51. All right, there's going to be sellers at 51. Look, they jumped in here. Look at those rat bastards. Right? They jumped in at 50 and they front ran here because they sold here and here before. So there they go. So friends, if you are long, make sure you do sell into strength because we want you to get paid. Right? We really want you to get paid. Now, once you get good at this, right, if it's a little slow, you can put a little position together here and sell into this strength. It's a dangerous trade, though, right? It's not A plus. The A plus when it goes when you trade from the edge, right? So this edge failed. So I would wait for this edge to be taken again. What I'm waiting for is them to buy all this inventory under 51 and then take it up to 56 to market, right? Or wait until they do a look below and fail of 31. Does that make sense? Oh yeah, I love the outlets, right? So when I'm trading, this is where I got it from, folks. See, I had one of my first clients. His name was the Penguin, right? He was a short little guy, and he came from India. And he, you know, those student Visa and Mastercards. You know, he maxed those out and he bought a stock, and the stock went from 30 cents to $5, and he was hooked. And ever since then, he'd try and invest in companies, you know, that promoters were the promoters were really good and they were going to run the stock. But over time, he realized if the stock's $1, you can go to the promoter and buy the stock at 20 cents because they always need money. So that's how he used to make his money. So if the stock was trading at 50 cents, he'd try and get the stock at 10. So every time we looked at a deal, right, he'd always look at, you know, I'd go, hey, this deal's cranking, you know, these guys, they're doing good volume at $2, $3. And the first thing he would tell me is, can we get some position? Now, what does that mean? Can we get, you know, if the stock's trading at $2, can we get 1 million shares at 80 cents? Go to these idiots, offer them 800 grand. They'll take it. They'll take it. And that's how rich people and hedge funds make money. Because when you're buying a stock at $5, they own it at 50 cents. Get what I mean? It's all about cost basis. So he who has the lowest cost basis has already won. Feel me? He who has the lowest cost basis has already won. What do I think about adding to winning positions? I think it's a great idea if you've got the cash and the trade management skills. So if you're trading, I don't recommend it unless you're trading millions of dollars and that you don't, if you know how to manage a position. I am really a big believer in retail traders making a little bit of money and going away. Making a little bit of money and going away. Once you've built up an account and you've got 500 grand, $1 million in that account in cash, then you can take larger risks, right? Because you can afford larger business expenses, right? I have never added to a winning position. I've always been a liquidator, right? With me, it's like you show me a bid, I'm hitting it, right? I never saw a bid I didn't like. Now, I know in retail trading, prop trading, when you work at prop firms, they encourage you to do that, but they won't encourage you to do that unless they know that you know what you're doing, right? I think if you're trading size, if you know how to manage a position, if you know how to add, how to how to how to trim a position, um, you can do that. And if you know exactly the business reason for adding to that winning position, and you have the capital to do it, fine. But I really, really highly suggest that if you are not consistently profitable, that you don't even think about doing that. Like if you're profitable on 1 out of 3 trades, right? If you're making 2 grand, 3 grand, 5 grand a day, you can start doing that. But unless you're making, for me, my golden rule is basically that $1,500 a day. Until you're making $1,500 a day consistently, just keep it simple and don't screw with it. And the other thing is, once you start making $1,000 a day, you're not going to want to screw with it. Does that make sense? Like if I could show you a way to make money and manage your risk where your hair's not falling out because of stress, is that something that you would be interested in? Right? I'm a big believer in being in business tomorrow. I'm a big believer in normal people getting paid. The other thing too is, right, it depends on, like if you're adding to a winning position, first you got to have the capital. Then you have to have the trade management skills. And here's the other thing, David, you got to have the time. You've got to have the time to babysit that position. So if you have a trade that's running and it's doing really well and you have to go to work and you're like, "Oh, I can manage that trade from my cell phone." Careful with stuff like that, right? Especially in this market. The reason is this market is, as we say in Canada, folks, this market is a little haywire. I don't trust this market right now, right? I have a healthy mistrust of it. That's why I like to trade only at the edge, right? I'll scalp long, I'll scalp short, but if I'm putting on any kind of size, it's got to be from an edge, and it's got to, I don't feel comfortable. And that could be my past trauma, where I don't feel comfortable being in positions for a long period of time when there's a war going on. Does that make sense? I've always been a nervous trader because I've seen a lot of crazy stuff happen in markets. Let's see if we fill these single prints. See how there's a little bit of supply right where that old overnight low was? Hopefully that makes sense, folks, right? I don't want to discourage you from pushing yourself and doing really well. I just want to discourage you from losing money unnecessarily. Know what I mean? The stress is hard. I don't know how old you are, David, but I'm telling you, after my heart attack, right? I mean, I used to trade. I could trade a 5 million share position, and you know, and like cook a meal, uh, brush my cat, give her a brush, wash the dishes, not a problem. When I started retail trading, I would go in, I would buy one E-mini contract, and my heart would start racing. I'd get the irregular heartbeat, like do 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 do. So it was stressful because my ego was on the line more than the money, right? And I had to learn how to find a way to not have another heart attack and make money. So that's why I like low stress trades. I'd rather take 3 low stress trades and make $200, $300 on each trade. At the end of the day, you've got $900, $1,000. You do that over a month, it's not bad. If you make $500 a day, that's 10 grand a month, right? And it's consistent, and you're not stressed out, which is really nice, you know. Anyway, I've kind of gone on a little longer. I hope that helps you guys. I hope that helps. Have a wonderful, wonderful weekend. If I don't see you at 9 o'clock, come join us at the Trading Syndicate. You got nothing to lose. It's free for 3 days. I will be in the room on the weekend if you do sign up. If you have questions, reach out. I am around. Those of you who I don't see this afternoon, have a wonderful, wonderful weekend. Thanks very much for being with us and supporting us at Trading Syndicate. We really appreciate it. Have a great one. Be safe out there. Don't take candy from strange market makers. And we appreciate you folks. Thank you so much. See you in a bit. Bye for now.